Welcome back to the next session, boys and girls of CA Inter, especially the students who are preparing for CA Inter May examination. I started section series. In between, I could not post recorded sections because I was out of town. So now section 34 to 38 will finish in this class. Section 34 to 38. Just spend 15 minutes time and this is going to give you some amount of revision. It's not that you did not study properly. Those of you who did not study properly when the class was going on, that's a different story. You have to focus now. And those of you who have studied, it's going to be just a quick revision for you. That's it. So section 34 to 38 is one set of sections actually. This is related to, these sections are related to punishment for misstatement and misleading information given in the prospectus. Whenever company gives a prospectus, it is basically a document that is issued by company when company wants to raise money from the public. When company wants to raise money from the public, company issues a document. The document is called prospectus. We earlier studied the types of prospectus as well. So 34 to 38, 34 to 37 actually is related to punishment. So let's see what is this 34. 34 talks about criminal liability if in case there is a misstatement in the prospectus. So for whom criminal liability, whoever authorized, see there, whoever authorized the prospectus, and if it has untrue statement, misleading statement, or something is omitted, so those people, that is directors, KMPs, or experts who have authorized the prospectus to be issued with misleading information, misleading statement or omission, something happened, then they shall be caught under section 447 that is related to fraud section. Yes, guys. So the liability can be avoided by proving a statement. That means these people, these persons, KMPs, promoters, directors, who have authorized prospectors with misleading statement, what are they supposed to do if in case they want to have an immunity from this imprisonment or protection? Generally, when we talk about criminal liability, apart from penalty, you will have to go to a jail. So if in case these promoters, directors, KMPs, experts, professionals who have authorized this prospectus, they have to prove that the information was immaterial. The information that happens to be misleading statement, they have to prove that it is immaterial, and they also should prove that they had a reason to believe that the information was true by the time it was made by them. So maybe omission was necessary because they must have thought that this information is not important for a investor, and that information they can prove that it is not price sensitive. Okay, then they can definitely be exempted. That is section 30. Section 34 talks about criminal liability. Automatically the penalties, imprisonment, that is up to 10 lakhs, after 10 lakhs public interest. I think you must have studied this section, section 47, and that section applies. So section 34 talks about criminal liability. Move on. Section 35. Section 35 talks about civil liability for the misstatement in prospectus. When we use the word civil liability in company law, you need to understand that basically somebody must have been cheated, must have been deceived, must have been affected because of the wrong information, misleading information, misstatement, misleading information, omission, etc., in the prospectus. Because of this misinformation, the investor has invested. Later on, he lost an opportunity to invest outside or somewhere. He suffered losses. So the people who have authorized this prospectus under Section 35, they will be liable to pay compensation or damages for the people who have been affected. The company's several individuals typically held liable, like including directors at the time of issue, or the people whose names are there in the prospectus, that is promoter and the people. So basically section 34 talks about criminal liability for those people who have authorized if there is a misleading statement, and section 35 talks about civil liability wherein these people who have authorized the prospectus are expected to pay compensation if the person who has invested money in this particular company has suffered a loss because of this investment and misleading statements. So certain defenses absolve. I mean, there are certain. I mean, the person who authorized the prospectus, he can say, "Boss, I gave a consent, but last minute I withdrew the consent. I informed public also. I gave a public notice also." And I reasonably believe that I copied pasted the statement which was given by expert as it is. So the people who are liable under section 34 and 35 can definitely say that the I withdrew the consent, and to my best of the knowledge, I gave a public notice also. It was reasonable, etc. I just copied pasted expert statement. Therefore, I should be exempted from penalty. That is section 34. Section 35, civil liability, right? Section 36 talks about punishment for fraudulently inducing a person. Sometimes you not only gave a misleading statement, sometimes you not only gave a misleading statement, you not only concealed a statement, but you also induced certain people to invest money or certain people to deal with the company. So automatically what happens, it's like you have given misleading statement, you have given misleading statement, you have concealed some statement, and section 44 447 will apply automatically. Understood? And you made some people, you got some profit also. So the law says that this section says that profit may be disgorged to pay compensation for the victims. So section 36 talks about you not only gave a misleading information, but you also induced the investors to invest money. That means you deliberately made an attempt to convince them to enter into contract with the company, maybe underwriters, maybe investors, etc., etc. So section 34 talks about criminal liability for misstatements. There also there's an exemption if in case they prove that the information was immaterial. Section 35 talks about civil liability, where these people who have authorized prospectors like promoters, KMPs, etc., they shall be liable for paying a compensation for the loss suffered by the investor. So that means indirectly section 34 happens the moment there is a misleading information. Nobody needs to prove that he invested or he suffered a loss. But when it comes to 35, you must prove that you have invested based on that misleading information, and you also have to prove that the loss that you suffered. Section 36, you have to prove that there was not only a misleading information, but also there was an inducing method used by these people. Then they shall be caught under 447 for fraud, and the money profit that they gained will be confiscated, and that will be given to the affected parties as a compensation. Section 37 talks about who shall file a suit. So that means when there is a misleading information, when there is a misstatement, when there is an omission in the prospectus, there is every possibility somebody has been affected. So mostly investors, you might think. So first, this section 37 says who can file a suit. Number one, investors can file a suit. A group of investors can file a suit. Understood? An association of investors can file a suit. So ever since Satyam company fraud had taken place in the country, it is not necessary that every investor has to file a suit. In such case, if 10,000 lakhs of investors have invested, that creates a lot of issues. Therefore, this section allows a group of investors and an association representing investors can definitely complain or file a suit. 34, criminal liability, no matter what, whether criminal liability ke liye you don't have to prove that you bought shares and you lost, but civil liability you have to prove that you bought the shares. And 36 says they not only gave you wrong information in the prospectus, but they induced you to enter into contract with the company. And 37 says who can file a suit, either single investor or investors or a group of investors or an association which represents the investors can definitely bring out a suit against the company. Section 38 talks about personations. So why do you think that company only commit a mistake? Why do you think that company only commit frauds, etc.? Sometimes it so happens the investor must have invested in multiple names, fake names, fictitious names, etc., etc. I must have invested in the name of Babu, or in the name of Raipudi, or in the name of Babu Raipudi, in the name of Raipudi Babu, etc., etc., or fictitious names, etc. So when you have invested in fake names, multiple application forms, and fictitious names, investor also shall be caught under an act of personation, which means you disguised yourself as somebody. You disguised yourself as somebody, and you will be punished under section 447. Whatever gain, the profit that you earned by investing in the company by faking your identity, then you shall be asked to give that money. I mean, shares will be cancelled, money will be disgorged, etc., etc., will be sent to Investor Education Protection Fund. That's it. When it comes to 34 to 38, it's about misleading statements, penalties, punishments, so on and so forth. All right. Let's move on to next important section, that is section 39. Section 39 talks about allotment of securities. Common sense, you listen to me carefully. When you listen to me, then you will understand carefully. Whenever company issues a prospectus to investor, this investor will submit an application form. When he submits an application form, according to company law, 5% of the application worth money he has to send. If in case you have decided to invest 1 lakh rupees, you must have sent at least 5% of that. And another important thing is, according to SEBI, there is a minimum subscription that is decided by SEBI, usually 90%, but some companies like micro, small, medium enterprises, the minimum subscription that is to be received by the company may be changed. So that's why the law clearly says, as may be specified by SEBI. So moral of the story, when company received an application form from the investors for the allotment of shares, company has to check two very important things. Number one, application money minimum as prescribed by company law, that is 5%, or SEBI. SEBI prescribes 25% of the application form, application money, and minimum subscription as may be specified by SEBI. If in case you have received minimum subscription, minimum application money, then you will accept the application form. After satisfying this, when company accepted this application form, when company has accepted this application form, this is actually called allotment of securities under section 39. What the company will do immediately, it will send a letter of allotment, then it will send a share certificate under physical form. That is, if the regime is under physical form, because nowadays, according to section 29, as we discussed before, that all the shares are supposed to be issued in demat account. So if in case it is in physical form, the process is, as soon as you accepted application form subject to minimum subscription satisfied and minimum application satisfied, you will send a letter of allotment immediately, and you will send share certificate within 2 months. That is the point. That's it. And you will file PAS 3. You will file PAS 3 with ROC about the details of allotment of securities. That is very, very important thing. If in case you fail to allot securities within the time prescribed, then you shall refund the money within 15 days. You shall refund the money within 15 days. And if you could not refund the money within 15 days, you shall pay 15% interest from 16th day onwards. That is 31st day onwards. Sorry, 31st day onwards. That means you are supposed to refund money. You're supposed to allocate, what do you call, you're supposed to allot shares within 30 days. If you are not, this third point, see carefully, you are supposed to allot securities usually within 30 days, because minimum subscription has to be met within 30 days. If in case it is not met within 30 days, then you will have to refund the money within 15 days. If you fail to refund the money, then you will have to pay an interest of 15%. And thereafter, if in case you had allotted securities, then you have to file returns of allotment, details of allotment in PAS 3. That is the formal form that has to be filed by the company whenever. So last section for today's class, securities to be dealt in stock exchange. This section clearly says, whenever company makes an application, whenever company makes a public issue, public offer, then company must ensure that it has applied for a recognized stock exchange. And the stock exchange details you are supposed to mention very clearly in the prospectus. And the money received, that has to be kept in the separate bank account, and that should be utilized only for adjustment of allotment of securities. Understood? Company may be commission, etc. So section 40 says shares are supposed to be dealt in stock exchange. If in case you had gone for a public offer, you must have applied for one or more recognized stock exchange, for registration, listing, etc. Then money received has to be kept in separate bank account, and any other condition, etc. compliance has to be, and companies may pay commission for subscription also. I mean, for brokers, etc., etc. That commission related, we have got 5% on the nominal value if it is equity shares, and for debentures, 2.5% is there. So section 34, any misstatement in the prospectus, criminal, what do you call, liability. Then section 35, civil liability compensation. Section 36, if in case the authorized people have induced any investor to invest money and they suffered a loss, yes. Section 37 talks about who shall file a suit, either investor or group of investor or an association on behalf of investor. Section 38 talks about if investor has applied for shares in fictitious names, multiple forms, etc., etc. If later on, if there is any gain, shares will be what do you call it, cancelled, and the money will be disgorged and will be sent to Investor Education Protection Fund. Section 39 talks about allotment of securities on receiving the application, money and minimum subscription that has been prescribed by SEBI. Then accepting the application form is called allotment of securities. If in case you could not allot securities, you shall refund the money within 15 days, failing which you will have to pay 15% of interest. And section 40 talks about that whenever company makes a public offer, company has to, I repeat, company has to apply for recognized stock exchange, and that has to be mentioned very clearly in the prospectus, and also make sure the money that is received has to be kept in a separate account, and that money has to be utilized for allotment adjustments only. Thanks for listening. And this is going to be my attempt is to just give you some amount of revision last minute so that you can just remember. And I also posted one, I keep posting even answers, latest paper solutions, some critical question solutions also I will discuss. So please do subscribe and make sure and encourage your friends also to subscribe this Bricks Academy channel. This will help you a lot. And there are so many changes in ICA body coming up. That video I will post it in just one day, that is by evening. Okay, all the very best. Take care. God bless you.